think the market has figured out already, and probably has figured that out a few months ago, that we're now on the tail end of the rate tightening cycle.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue our wrap up of the silver year in review in 2022, which certainly was a volatile year, and a lot happened in 2022, although fortunately ending on a bit of a positive note as we're recording on Tuesday, December 27th. Silver has been choppy on the day, but back up over $24. And fortunately, to discuss the silver price, some of the news, what's going on with the mining stocks, and a whole lot more is David Stein of Kuya Silver. So, David, great to have you back on the show, and early Happy New Year, but good to see you. And how are you doing today, my friend?
Well, thanks for having me. Always a pleasure to talk silver. I'm doing well, thanks.
Well, it is good to have you here. And as we were talking about before we hit the record button, certainly quite a fascinating year that we had. And I remember being back with you at the Silver Symposium in Spokane, Washington. And it looks like we may have, at least on the silverprice.org chart, may have been to the exact bottom. There it was on Monday night. We arrived 1880. Then I remember each day waking up there. Tuesday conference starts 1840. Wednesday down to 1792. And again, that was in the middle of the Federal Reserve's interest rate hikes, which are still ongoing. I was wondering if we were going to face something like 2008. You were a bit more confident those couple of days we were there. And sure enough, quite a rally that we've seen from 18 bucks to 24. So nice 33% rally for silver in the past 4 months, really. Interesting, as we still have the Federal Reserve rate hikes continuing while that's happening. But any thoughts on that rally? Anything else that we've seen in 2022?
I think that the rate hikes make less and less impact the more they do them, if especially if they keep them at sort of that 50 or 75 basis point moves, because it's really the percentage move that matters, that actually affects how people, the availability of capital, how much it costs people to borrow money, etc. And so a 75% or 75 basis point move now is much less impactful than it was when rates were sub 1%. So I think that's so to say that another way, I think the market can sort of has figured out already, and probably has figured that out a few months ago, that we're now on the tail end of the rate tightening cycle. And so sort of looking forward, look to more stable but high rates, or potentially, if there is some kind of a recession or whatever, lower rates in the future.
Yeah, and it's interesting when you talk about that rate hiking cycle. Obviously, we've seen at times the gold and silver prices move almost directly inversely to the dollar index, which got up to I believe it touched over 114 at one point, down to 104 today. And we've seen that while the Fed is slowing down, some of the other central banks, the ECB, still indicating that they have plenty of hikes to go. Japan finally raising their trading band cap to now you can get a whole half a percentage of a point on on the Japanese debt. But interesting when you think about how there's perhaps, like you pointed out, we've seen the end or the brunt of the Fed rate hikes, which you would think would be good news for gold and silver going forward, if that is indeed the case.
Yeah, I mean, it's the market tends to be forward looking, and obviously we all get surprised once in a while, but in general that seems to be the way things are going, is that the tightening cycle is slowing down. and as well, the U.S. dollar may have peaked for the the reasons that you just mentioned. And it's had a multi-year bull run as well. So that's something that tends to put pressure on precious metals, and the fact that they've been able to rally really in the face of that higher dollar, especially up until a month ago, or very recently, the dollar started weakening. But silver moving off the bottom since late August, it sort of did so in the face of higher and higher DXY. So that to me is very typical of what we see at tops and bottoms, is the DXY and precious metals trade together for a brief period of time, and then they start doing their own thing again.
Yeah, and interesting as we look at this chart here of the dollar index, which again, it might add 70% being compared to the euro and the yen, another 11% to the British pound. So perhaps not an index of all-time stability bastion of currencies. Yet you look back here that it was actually below 75 when all this quantitative easing began. Obviously, there's quantitative easing around the world. Although, given everything that we just talked about, I mean, imagine if you ever got a level somewhere similar to what there was before you had the greatest debasement of the world's reserve currency in its history. Interesting to think what could happen, a couple of years from now. We're looking at 75, what the gold and silver prices would be, especially because the main thing that I'd love to get your comment on here is that even despite the rise in the US interest rates, you're still getting a negative real return, even if you are holding the dollar cash, even if you are holding the treasuries, which I get it that, it's perhaps not as bad as it was, yet that's still a negative real return. You have 7-8% inflation, and it's great that you're getting the 4% coupon now, but still a little bit of a problem that is sitting there like a big elephant in the room that has yet to be resolved, despite what the commentary on Wall Street might be.
Yeah, and I mean, this might be the big surprise, or the market mover in the next year, is trying to figure out, will CPI start coming down on its own with these higher rates? Is it going to put enough pressure on the economy to slow things down?
Yeah, well, it's going to be interesting to see how this all shakes out. I wonder if we do get a more overt recession. I know the last couple of quarters we've seen positive growth according to the GDP figures after a couple quarters of negative growth. Yet certainly when you read the headlines and how companies are describing conditions out there, it does not seem ideal. And even Jerome Powell was talking about how they have their 5.1% federal funds target, although in 2024 they have a lower target than that. So I don't know if that's implying rate cuts yet. Certainly going to be a lot of eyes watching to see if the Fed does reverse course, whether that's 2023 or 2024. It doesn't seem like we're headed towards 9% interest rates 2025 and beyond. But David, one of the things that I wanted to get your thoughts on is that now that we have silver up at 24, we see that some of the mining stocks, and I'll pull up the SILJ to SLV to just get one proxy of how things are looking. Seems like the mining stocks have not responded as much to the recent rally as they did from the recent decline earlier in the year. Any thoughts on what we've seen there in the mining stocks? And is there a certain point at which you think the activity picks up there? Is there a certain level, or is it just people responding to how, it's been only a short period of time where we've seen the higher silver price again?
I think April was the last time we had silver at 24 or higher. And so you can kind of see where the ratio was in April. And you can see that we're significantly lower than that now, with the same silver price. So anyway, all that is to say that you're right. Silver stocks have not rebounded as much as one might expect, purely based on the silver price. I think there's a couple of factors to take into consideration. One is that, yes, it maybe hasn't been enough time, and people have had the rug pulled out from under them so many times with silver, especially over the last few years, that maybe they want to see a few more months of higher prices before they start pricing that into stocks. That's one possibility. Another possibility is that because of the higher interest rates that we have, basically the discount rate on these equities is now higher, and the valuations, therefore, to expect is to be low. Yeah, you expect the valuation to be lower on average going forward than it was when rates were at 1-2%, whatever, 0%. So I think that could be a factor. I think the other factor is the negative wealth effect that we've had with a lot of other asset classes completely crashing and burning, and including mega cap, large cap tech stocks in the U.S., including cryptocurrencies, and those people who own those stocks or those assets. Some of them will dabble in silver stocks too, or gold stocks, and they're less able to do so when they're losing so much money in their other asset classes. So I think there's a couple of factors in there that all may be playing into a bit of a perfect storm for really, really cheap valuations right now, and I think that means we just need more time here for things to recover. But it does look to be a really good time. I mean, certainly, looking at my own company, Kuya, we're a lot closer to our bottom than some of the other stocks out there, and again, I think that's just a great kind of opportunity that people have been throwing the baby out with the bathwater this fall and into the tax loss selling season. And that's bound to rebound, and some people are going to get a great bargain down here.
Yeah, and like you point out, I think we do have that tax loss selling factor in play there, and I think you're also quite right that there's a degree to which silver has jumped back up to the $24 range. I mean, that's a pretty quick move when you think that here we are on October 14th, 1827. So 2.5 months. I think that caught a lot of people by surprise, and people are still almost digesting. And it's like, wow, we're back at $24 silver, which was a little shocking. Yet when you look at where we're at, seeing at least light at the end of the tunnel with the Fed hikes, I think that's certainly good news, and we'll see at what point the silver miners catch up to that. Although, like you said, still quite a bit below where we might have expected. David, is there a certain level, obviously you're on the mining side of this, where you think more projects start going back online? I mean, like we were just discussing, it feels almost as if it's still recovering from the bear market rather than the way things were early 2021, when a lot of silver was close to 30, a lot of new projects were getting started. Is there a certain level or time length you think it takes before we get to an environment more like that?
Well, I think the availability of capital is more important than the silver price. Because basically, in order to increase silver production, a lot of capital is needed in all companies, and who have silver mines. So that's been something that, again, perhaps because of the increasing interest rates, that availability of capital has been really sluggish. It's been really tough, and we really haven't seen anything significant change there. There've been a few projects that have been, sort of muddling along for the past couple of years, and some bigger projects where companies have been able to raise money in bits and pieces, but it's taken them years to do so. And yeah, we're really not seeing anything new in that sense. So my sense is that you're still looking at years, several years, to bring on any significant new supply beyond what's already in the pipeline. And by that, I mean like actually under construction or being commissioned right now. But anything that's sort of in the exploration development phase is probably again on average several years away, especially for any bigger projects. Generally, the bigger the project, the longer it takes, due to many factors. Takes longer to permit, takes longer to get the equipment, takes longer just the sheer construction time takes longer. So those projects that might actually have the potential to impact the global silver supply are not being built right now. So therefore, I think you probably got several years here. It could be 3-4 years where we won't see much, if any, growth in the silver price. At least at these 24, 25, that's not enough to move the needle.
Well, with that said, let's say we went forward 10 years from now. We have the two buckets where on one hand, the supply and demand that we're seeing right now, Silver Institute said 194 million ounce deficit. Then there's the degree to which people are concerned about the quality of the money, the negative return, the cash losing its value. Any thoughts on what will be driving the silver market forward? If it'll be a combination of the two, perhaps most likely, but do you skew towards one side or the other, or what do you think will be really pushing things going forward?
Well, obviously, if you give me 10 years, that's a lot of time. But look, if you really look at the market history of precious metals, I think the monetary aspect of silver is far more important in determining what that price will be. If you look back the last 40 years, you can see that silver largely follows the gold price. And although it has a higher beta, meaning that it goes up more in percentage terms, when the gold price goes up, silver price goes up more in percentage terms, also falls more when the gold price falls. But in general, they track one another, and that's largely related to the sort of the monetary theme of people losing faith in the value of fiat currencies, or placing, or if you want to look at it another way, placing more value or more of a premium on on hard currency, hard assets like gold and silver. So I think that's going to be more important, and we really and as well, those cycles take those sort of monetary cycles, they take 10 plus years to evolve. And I think so that's certainly something that could happen over the next decade, is we see much higher gold prices and as a result much higher silver prices. That being said, I think that the supply demand fundamentals for silver are very compelling. There's a lot of important things that the world needs that require a lot of silver, and a lot more silver than we have right now available. And so that may be driving things on the margin as well, is the or perhaps putting a floor in the price, because of course no market goes straight up, and over 10 years there's going to be years where it goes up, down, whatever. But I think that the demand is going to probably put a floor on the price at each level.
Yeah, that makes sense. And I think there's a bit of a change in the environment with finally seeing, I mean, it wasn't like we got 3 and 4% inflation. I mean, we got double-digit inflation in many places. Here in the U.S., think 9 or maybe in top 10%, 1 or 2 of those months. And I think that has opened people's eyes. I mean, when you look at the gold price here as we record today, 1820. So despite all that's happened, I mean, to be sitting not that far away from the all-time high, I think is somewhat significant. And then read stories like this: inflation, uncertainty, fuel new gold rush at ancient Australian mint. Demand for gold has never been higher. Right now, we could sell 3 times as many coins as we have. And here, someone mentioning from an older generation, whenever things get a bit uncertain, we come back to gold coins and tell ourselves we'll always be able to sell them. I mean, this leaves aside the whole situation that we've seen with the de-dollarization and what's going on with Russia. And I mean, there's a lot happening out there. And then when you look at the Fed's current plan notwithstanding, I get it, things are intact now, but there's a lot of these questions still haven't been answered. So a lot to support continued demand going forward. It's almost right now is a time where things are supposedly calming down, yet the gold price still on the high end. And I guess we'll see how silver catches up in the times going forward. But doesn't seem like the inflation concerns are going to be going away anytime soon, even if the Fed does get things somewhat lower.
Yeah, I agree. I mean, while you were talking there, I was just thinking about how the last time that the silver and gold prices kind of peaked back in 2011, we were at a geopolitically very stable kind of time in the world, and in the last 10 12 years, that has started to slowly but surely disintegrate as well. So that's another, I think, kind of X factor out there. When you think about obviously what Europeans have been through in the last century, very different to America. America's been extremely fortunate to be so stable and sort of insulated from any real military conflict, other than obviously sending people away if you are in the army. But on American shores, really, it's been very, very peaceful for the last century. It's not been so in Europe. And so when you have, and I realize World War II is a long time ago now, but you have people who kind of think back and remember their parents talking about, yeah, we had gold coins because we didn't really know, whose money we would be using in the next few years. That's something that, again, I think maybe we take for granted, and obviously hope we don't go into any kind of like extremely devastating wars. But at the same time, you think about where we could be, where things could go with respect to the metal prices in the next decade. That's another, I think, just good reason to hold gold and silver as insurance.
Well, I think so. And then again, as we mentioned earlier, the fact that you have supply and demand imbalance in silver is what has, well, I guess when I first got into silver, that wasn't quite the case back then, but add that in, plus so much of it being consumed, which is a factor that's been in place for a while. And then the small size of that market, which I think leaves a lot to look forward to going forward. So either case, we'll see how things shake out in 2023. Do you have any forecasts for 2023, David, in silver, gold, or any other parts of the market?
Yeah, I think we'll make a new all-time high in gold in the next 12 months. Maybe just, and silver will follow it up into the 30s. That would be my prediction for the next 12 months. Keep it kind of reasonable.
Well, I think that makes a lot of sense. And perhaps when the Fed finally stops with the hikes, I mean, I think if we actually do get the reversal or pivot in 2023, I mean, you've seen how some of the metals react when inflation comes in 1/10% or two better than expected. So I think it'd be pretty wild to see what will happen when they finally do turn course, whether that's 2023 or 2024. I think perhaps what makes the environment easier from a metals perspective is that you could debate whether it's one of those 2 years, but gee, I mean, it seems like even Jerome Powell and the Fed with their data is acknowledging that at some point they've talked about rates being lower, their neutral rates. So We'll see how that all shakes out going ahead. Although, David, before we wrap up, could you give us an update of how things are looking at Kuya as we round out 2022?
Sure. So, I mean, wrapping up wrapping up a very big year for Kuya, where we, going back, it seems like longer, but it was in early 22 where we had our resource estimate, first ever resource estimate at Bethania, got our construction permit for our mill project. We made new discoveries at Bethania throughout the year, culminating on some discoveries at our second project, Carmelitas, or our satellite mining project, Carmelitas, a few weeks ago, I think that was early December. And then we put out our PEA, which was very positive as well, very strong economics. So we had a really big year in terms of hitting milestones and sort of generating value for the project. Obviously, not a good year in the market with the stock price. For whatever reason, investors did not decide to appreciate what we were able to do there. But I think that had to do more with the broader markets than with Kuya itself. I think this year we're just looking to build upon that. Move the Bethania project forward. I think we're going to be able to do some work on our Canadian project as well this year, and create some value there, because I think that's been completely forgotten about by the market, and it is a great project as well, with a lot of similar opportunities to Bethania in terms of high grade silver near surface, can go into production very quickly once we have a resource established. So I think I'm really excited to see what we can do in 2023 after really a big and very successful year on the technical side.
Yeah, and David, one thing you mentioned in there that I thought would be worthwhile to touch on is that while the stock price has gone down, it seems like you've been moving things forward. It hasn't been in response to any particular problems or issues that have popped up. And perhaps you could just touch on that. So I know some people might be wondering, did something happen? Has there been a setback, or is it just that a lot of things have gotten sold off throughout this year, especially in the whole mining sector?
Yeah, well, look, I think if you take a step back and you look at how sort of pre-production mining equities should be valued, so anybody who's not in production, which includes Kuya, although we could be in production very quickly, but technically we are not in production as we speak. So obviously, all those companies, whether they're drilling, they're doing exploration all the time, whether they've got a development project like us, they're burning some cash all the time until you get into production. You can start making cash, making free cash flow. So typically the big factors that drive valuation are going to be asset growth. So that could be resources, it could be making acquisitions, but something that's going to basically give you more value per share. And we were able to do that in 2022. We added resources, we made acquisitions, and then we also were able to demonstrate some value to those acquisitions, as well, with some of our exploration results that we had particularly recently. So that's one factor. The other factor is going to be bringing things forward in time. So obviously, a mine that's going to be in production in 1 year is worth more than a mine that's going to be in production in 5 years. That's the time value of money. And as you bring those cash flows closer and closer to present day, that in theory, on paper, creates value. Of course, then you've got the market, and do people actually care? What's going on with the metal price? That's always a factor. And all sorts of other factors that are sort of outside of your control. So I think in our case, we demonstrably created value in terms of increasing the value of our assets that we own as a company for our shareholders, and also bringing forward our future cash flows by de-risking the project, getting things permitted, basically getting engineering done. That was a perfect chart for that, perfect slide. So we've been able to do that, and now we just need to get into a situation where the market is more receptive to that, because clearly they weren't. Through most of 2022, we had falling silver prices pretty much the whole year until the last few weeks, or the last month or so of the year. Things started to rebound, but pretty much throughout the whole year, things were falling, and we were obviously caught by that, and and obviously people worried about the future of a small company in the silver space. We are market cap wise on the smaller end, Chris, as well, and I think that affects when we start to see those flows. So typically, when there is a change in the sector, when people go from sort of bearish to bullish, they'll buy the biggest companies first, because they know that if they're wrong, they can sell them really quickly and no one will ever know the difference. So you'll usually see, like First Majestic and some of those Pan American, some of those bigger companies will get the cash, will get the inflows first, and then gradually those trickle down to smaller and smaller companies. And so we should be getting that trickle down here in any very, very soon, I think. Probably immediately in January. Again, we also had the tax loss selling that affected us hugely. Again, it's going to affect a smaller company more than a bigger company, because we're less liquid in terms of our share trading. So one or two big sellers of the stock is going to make a big difference versus First Majestic, where you probably wouldn't even know. They trade millions and tens of millions of dollars a day. So anyway, so that's what I think is going on, and if you look at all those factors on balance, it looks very positive to see a change in our share price moving forward into 2023.
Well, and I think you have the advantage that you are headed towards production. So, like you said, the cash flow helps. And one thing, actually, perhaps the last question that, at least in terms of people wonder how you're viewing it, I know you are the largest shareholder and have been increasing that in recent times. So perhaps anything you'd like to comment on there, which I think at least does speak to what you're seeing and doing yourself.
Well, I mean, really, I'm seeing, a share price that is, that's extremely compelling, and these things happen, right? And you got to take advantage, and when you can. So I've been able to do so. Other people on my management team and our directors have been buying shares as well. So I think we know what's going on, and we're looking forward to to making money on those purchases.
Well, I think that makes a lot of sense, and at least is helpful for people to know what the management is actually doing. And perhaps in wrapping up, David, if people do have questions, would like to find out more about, especially what you just talked about with your purchases or anything else, what is the best way for them to reach you?
The best way is to start at our web page, just because then there's links to all the other ways to contact us. And so we're pretty active on social media. You can get a hold of us through Twitter, Instagram, stuff like that, and then also directly through our web page as well. So that's what I would suggest, and everybody's got their own favorite way of communicating with companies, and but I would say we bend over backwards to make ourselves available to our shareholders and to interested investors, and so by all means take advantage of that and contact us.
Well, David, I appreciate that. Appreciate what you're doing out there, and certainly an eventful year that we've gone through in 2022, but hopefully a lot to look forward to in 2023. And We'll look forward to talking some more silver and see how things all shake out. Although, congratulations on just continuing to move things forward, whether the environment is easy or hard. And I think there's a lot to be excited about with what you're doing. And soon you will be in production, which I know people are excited about as well. So we'll look forward to talking all about it more soon. And thanks again for joining me here today.
Thanks a lot. I look forward to giving you updates and continuing to talk about solar.